Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to click that subscribe button below and join the Passive Income Posse. Passive Income Posse. Super excited for today's guest on this episode. You know him on Twitter as @Asset Traveler. Adam, I'm going to throw it over to you to give yourself a bit of an introduction.
Hey guys, really happy to be here on the Passive Income Posse. So my name's Adam. I'm Asset Traveler on Twitter. I used to go by the name as Tourist, but decided to change the name to my real name, which is Adam. I actually have a very strong passion for passive income. I think the doors it opens and the lifestyles it offers is immense. So I'm really excited to kind of hone in and have some fun talking about this specific subject and everything it encompasses.
Yeah, exactly. Passive income, everybody, my community knows, everybody that follows me on Twitter or watches this podcast knows basically one of my favorite sayings is, I love it when companies pay me to not work for them.
Exactly. Just make money, or there's the famous Buffett line, "Making money while you sleep." And
Right.
I think they're all under the same umbrella of kind of uh, working away from just directly using your time for capital, and more so directly using your time for to make someone else capital. And so I think every getting away from that is can be very exciting, even if often at times can be scary at first.
Now, just before we started recording, obviously I know that you're a Canadian because of your Twitter profile. Your banner picture says Kitimat, BC, the LNG, natural, liquid natural gas, etc. But you mentioned that you're in Kentucky, so does this have something to do with the asset traveling aspect, or are you there for work, or why are you in
So,
Kentucky?
yeah. So it's a bit of a unique situation, but with like the name Asset Traveler, I do love traveling. It's kind of one of my favorite things to aspire to do. There's a lot of places on my bucket list per se, but then at the
Yeah,
same time, with just selling stocks, buying stocks, crypto, and then like all assets of all regard. I just feel like eventually everyone always takes profit. Like you can obviously hold until you pass away and then pass the assets, which is also a feasible strategy. But a lot of the time, I'm moving between assets, even if it's years, months, quarters. But I kind of combine the names to kind of work and have a play on my lifestyle that I hope to continue to achieve, and also at the same time have a play on my kind of investing and trading strategy. But in regards to Kentucky, I
yeah,
actually
you're a
joined.
little early for the Kentucky Derby.
Yeah, exactly. Unfortunately, I would love to go to the horse races too, but my buddy, I joined one of my best friends. He actually recently quit his job about a year ago to go full time into his new venture, which is a Airbnb arbitrage. So in short, he basically rents units. I'm just gonna rents units for say 2,000 a month, and then he makes 4,000 a month Airbnbing them. So he's really growing really fast, and he came out to Kentucky because he has 6 new units from one landlord or one managing company. So he's setting up the companies here, and I love seeing new places. It's not even just I'm not just a get me to the sun and drink cocktail type of guy. I like walking around, seeing the culture of different places. So I
Right.
came out here to help him learn from what he's doing and um, kind of enjoy. I joined him on that adventure. I can still do my work from here, no issue. So I joined him out in Kentucky for this week, and it's been fun. It's been really good, and it's fun to see. And even him, he. I guess we might as well finish up his topic, but he started off just doing it on the side with his brother's units, and doing it very while also working full time. So it actually kind of was his passive income on the side, and then he continued to learn and develop the skills to kind of take it full time. And
Awesome.
since and we were talking even this week, like the what he's accomplished in a year is just immense growth. It's impressive, any angle way you look at it. He's obviously works very hard, but at the same time, he kind of has developed a lifestyle that he's very comfortable with, and he kind of enjoys a lot more. Um, and so it all started from the passive income, and then it became his full time gig. Um, and yeah, it's succeeding extremely well. Maybe one day his company will be a household name. I think it will, but that's why I'm in Kentucky. I've never been to Kentucky. I wouldn't say it's a must go for people going. It's very small. It's but it's still beautiful and the people have been really nice.
Yeah, I bet. Yeah, that, Southern hospitality, right? And that's a great example of turning your buddy there, turning the side hustle into a full-time job, right?
Exactly. It was his side hustle. And then he continued to learn. He basically proved out that his model works, the math works. And then he jumped into the water per se and really tried to push the growth, got the growth, and now he's continuing to grow. And so he's at 22 units under management. And this
Wow,
and in the Kentucky was six of those. So it's a
nice.
big time jump for him. It's 25%. And
Yeah,
one of the
wow,
reasons,
that's an
yeah,
incredible story. I'd love to have him on the podcast someday
you know what?
and hear his entire story.
I can arrange that. But yeah, it's just if the math works, kind of the time works and the math works financially, those are kind of the two big things I find with passive income. It's just if the numbers work and then if it's worth the time to make the numbers work, I find those are the two big, and then obviously you have to love it.
Right.
I've done some things on the passive income side where I don't love it, and it's every time I don't love it or it's just my heart's not into it. It's just not the same. It's just all the little things continue to add up, and the results just don't end up coming.
It just becomes
Um,
another job that you hate, right? You don't wanna do that.
exactly, exactly. It just becomes the thing you were trying to escape from, and and if you end up doing the thing you're trying to escape from, I find it very hard to be successful. If your heart and if you're kind of just not into it, if you don't love it, you don't really enjoy it, you don't love like the hard parts too. You don't because you understand like what you're building. I find it very difficult to continue to properly do it at a successful way. So I can share stories, I guess, of some things that I've done that I kind of didn't like or I liked at first, and then once I stopped really enjoying it, I kind of had to almost weave off it because the level of success just wasn't the same when my kind of passion dipped. And
Right?
as you said, it just turns into the
Another
work that you
job
were
you
almost
really hate or dislike or do not wanna do. Before we get into your story, let's talk about, side hustle, which is buy investing shirts. Use the link in the description, code word Posse. Lots of great, merch over on buyinvestingshirts.com. The link will be in the description. Like I said, you can use the code word Posse for 5% off. They have passive income posse merch, toques and hoodies and coffee mugs and all sorts of great stuff. So definitely check that out. But yeah, Adam, I definitely would love to hear several different aspects of your story, like some of those side hustles that you started that you didn't like, and then I'd also like to get into talking about the companies that you invest in, and obviously, dividends are, in my opinion, and I think a lot of people's opinion in this community, my viewers and listeners agree with me that, like, they are the most the biggest and greatest form of passive income because you just buy a company and you wait a month or 3 months, like, whether it's monthly or quarterly dividend, and they just give you money, right?
absolutely. Let me preface by saying I love dividends. I am in the dividend camp, especially when the company has hit a more mature level that dividends make sense. I think absolutely getting paid to wait often, even if there are future plans for the company, getting paid during that process, getting paid every month. It also offers a very comforting level of safety, knowing that you have X income coming from this stock, so the share price doesn't really matter as much. So I'm in the same camp with the followers and the fans of the show. And also, I would like to say for people just listening, I did see some of the merchandise, and it is very cool stuff.
Awesome.
But yeah, I am a very big fan of dividends, and they're right up the alley of just making money while you sleep and kind of having your assets or your hard work of years past kind of bear dividends, bear fruit.
There's nothing better than waking up in the morning and seeing a notification on your phone that says, "Oh, this company paid you a dividend." Oh, wow, right? Like, "Oh,
Absolutely.
great."
Even the to take it like I love even like I know it's monetarily doesn't change anything, but when the companies pay monthly compared to quarterly, it
Yeah,
like it it literally costs nothing, no difference, like realistically, and it's just nice to see every month. It's like the opposite of that monthly bill. You have the comforting dividend coming in. So
Yeah.
I have dividend reinvest on for almost every single dividend stock I own. Sometimes, and I love it. It's just a steady growth. It's thoughtless. It's mindless. The work's been put in. You just keep up with the company that ensure the dividend's not getting cut. And there's so many companies that have very strong reputations of increasing their dividend 10, 20, often even more years in a row. So
Right.
I think it's a
Yeah,
fantastic thing
25,
to
50,
yeah,
like,
like
the dividend kings
exactly.
and dividend aristocrats, like, you can't you can't
Yeah,
argue
you
with them.
can't.
Sorry, go ahead.
No, I was gonna say, like, how can anyone, like, people try to knock sometimes, like, companies and with their dividends, but, like, even, like, seeing, like, Canadian Natural Resources, like, when oil went negative that year, they still increased their dividend, and, like, now they're at 25,
Somehow.
26, 26 years in a row, and it's just remarkable, and to have that backing behind you, to have that story, I think, behind any stock is it's just a completely different level of, safety, a completely different level of respect. I think it just changes the way you look at the stock, and there are lots of stocks that honestly are pretty much like scams, and that is if a scam is on one side of the pole, as far left as you can be per se, 25 years of dividend growth, I would say, is the complete opposite of the scam. It's the most respected. You can give it to someone to hold for 50 years and just add to even for 50 years, and you don't have to worry about it.
Yeah, I do like to say that, investing in dividends is the greatest get rich slow scheme ever invented, right? Like, everybody's not everybody, but people are always, "What's a," "get rich quick schemes," and, of course, get rich quick schemes never work, but dividend investing and to get rich slow, you can't beat it.
Absolutely, and even there's such a rise in people that just wanna get rich overnight, and they end up just gambling. It's like they literally
Yeah.
don't even realize what they're doing.
Just go
They
to
don't
Vegas
realize
and
the
put
d
it all on red 13 or black I think 13 is red, just right? Like, just put
absolutely, and
$1,000 on 13 and hope for the best, right?
exactly, and they and what they end up doing is instead of like by just doing these get rich stuff, like like overnight options, for example, like options that literally expire in one day, they're at an all-time high to like with they're at an all-time high and the variance is like through the roof and people are just continue to pile into these options that are expiring day like the next day this week 2 days from now and it's just straight gambling like they're literally just paying these market making companies that are just
Right.
taking these people for a ride and the odds are worse than the casino and I even like there's a large rise in 3x inverse ETFs and 2x daily ETFs and they're scams. Like I don't know any other way to say it. Like if you zoom out on every one of their charts, they're down 99% over every 10-year period. And I've been in like I try not to engage in arguments anymore on Twitter just for my
Oh,
own
Twitter fight. I love Twitter fights. They're the best.
honestly if it's someone I respect and I've had positive conversation with, I don't mind engaging because I'll learn something and then
Right.
if they hear
And
something that
that's not
hard
necessarily a Twitter fight, that's more of an
exactly.
exchange of ideas and information.
Exactly, because they're willing to hear something that changes their perspective and change their opinion the same way I am. But there's people that will like tell me I'll look at something, I'll be like, okay, the fee on this is like 60% over the course of 1 year. And then someone will tell me, okay, well just don't hold for a year, just hold for a week or two. As if like the fee changes. And like how I'm trying to like tell you and help you, but if you're just gonna not listen and like immediately argue and all these 2x, 3x inverse ETFs, like they're just getting money piled into. Like Boyle is a 3x or 2x the price of natural gas. So if natural gas goes up 5%, it's supposed to go up 10% and vice versa. But because of the daily fluctuations, it's not the same. Like if natural gas goes up 5% and then goes down 5%, in theory it should be at zero, but because of the way it's designed, you take a large fee, and it's like it's the money that's piled into it is like 1.4 billion up 4x over last year because everyone is just they can't even fathom just investing in something that invests slowly. They need the 3x, the 4x. It's like a slot machine for them at this point. And every metric I'm seeing is just people continue to just gamble and like they want to get the next big thing. They hear AI and this and that they don't even care if it's losing money at this point. Oh this could 4x overnight, and it's quite ridiculous to see. But I also think the current market makers, the banks, the people that have the money and kind of really work around the market, they're encouraging this behavior because they love it. They're the house that's taking all this money. So they're buying. Like I see even like articles that are just being straight bought, like on the video AI, and they're they can control the story and they're controlling the narrative and they're bringing these gamblers into their casino per se.
Right.
So I think that's the opposite and the wrong way to do it. And I'm more on the if you actually make a 10-year plan and investing and planning and saving and putting money towards like dividend paying companies that are growing and I think in
And
10
just
years you
dollar
look
cost
back and
average into that company or couple companies every paycheck, right? Like pay yourself first,
exactly,
take that 50,
exactly,
100, $200 out of every single paycheck and put it into whatever your brokerage is, Wealth Simple, or in the US, probably Robinhood, or, Quest Trade,
exactly.
whatever, whatever your brokerage is, pay yourself first out of your paycheck, get it into your account. And like you said, have that long-term 10-year plan and just keep, you know, I've had some guests on here that only have, 10 different companies and they've just stacked to those 10 companies and they're doing great. And I've had other guests who have like over 50, over 60, over 70 different companies and they're kind of like chipping away at all of them and trying to, continue to stack more shares and all of them and grow their dividend. Kind of, basically no wrong way to do it. I did
I
want to
agree.
circle back. Sorry, go ahead. I'll let you.
Oh, we'll finish on this and then I'll let you go. But I was gonna say I'm in the camp of I own less assets, no matter, and like this is proportionate to whatever my net worth is at the time. I'm more in the 10 assets I like to own
Yep.
versus 50, just because it's easier for me to track them and
Manage.
I just
Yeah.
manage track them. But I understand people like diversifying with 50 and both strategies. There's no wrong answer in that regard. But
Yeah,
sorry.
I'm in the
Yeah.
10 to 20, or sorry, I'm in the 20 to 25 camp and I'm okay with that. I definitely do not ever want to go over 30. So I kind of keep an eye on that, like opening new positions. And that's just where I am. That's where I feel comfortable. And that's again, like you said, there's not really a right or wrong answer to that one. I did want to circle back to what we were talking about right off the beginning and the side hustles that you have had. Well, obviously, we were talking about your buddy and his side hustle doing immensely well, great. But some of the side hustles maybe that you've done that you were talking about, like, beginning to hate them, and I just maybe briefly touch on that before we dive into some of maybe the companies that you invest in as well. So, side
Yeah.
hustles first.
So I guess roughly, I don't know, I guess 10 years ago, I started doing sports betting on the side, just dabbling and kind of just learning the market. And this was at the time, the market was significantly smaller than it is now.
Right,
Like significantly, like to hear about sports, like now it's legalized almost everywhere. At the time, it was very like Proline Plus was the only, or Proline was the only option in Ontario. And it was very much smaller market, but I started doing it at a smaller level. And every year I continue to, I guess, develop skills, and I wanted to beat the market. I wanted to win. Basically, I didn't want to lose. Losing obviously is not fun, and there were ups and downs early on, but over time, I started working as an auditor in accounting, and I was still doing this on the side. And I think this is year 6 or 7 at this point, but it really grew to the point. So at first, the first couple of years, it was working, but it wasn't anything crazy. It was paying for vacations for the year. It was helping out with bills, saving a couple of money, but it wasn't actually material enough to really move the needle. And then
mhm.
while I was working, I ended up. I remember I was making more doing sports betting than I was in my day job, and
How do you pick the
I
right teams? Like, when I pick a team to win, they lose.
yeah, it's really just a lot of effort and time. Like it wasn't an overnight thing. It was like a 5-year process, and really finding the
Betting with
niche
your head,
areas.
not with your heart.
Oh, most definitely. And it was a long process, and but then I decided I was making yeah. So then I decided, you know what, I'm just gonna quit my job and focus on this more full time.
Holy
Really give it
wow.
Yeah, really give it the effort it deserves. So I quit my job, um, focused on this, and then essentially got it up to a level that was was better, but and then I guess to the point where I started to hate it. Like eventually, because the market is limited in its size, like to compare the sports betting market to even like the stock market or even like the laundry detergent section of the stock market, it's not even comparable. It's just like the stock market is just significantly bigger. Like the amount you're allowed to wager, so the growth really starts to stifle unless you're um, really trying to turn it into a full blown corporation. And so it hit a point for me where I was starting to lose my passion because I didn't see where it was going. It was turning into a lot more work for just to continue to keep it and to grow it. So I hit a point where I basically just made the cold hard decision that I'm going to stop putting my time into sports betting and I'm going to start putting it into the stock market, the crypto markets, the learning the ins and outs of long term investing. And I really focused on that. I remember buying a bunch of books, reading a bunch of books, finding mentors to kind of pick and bug their brain with. The gentleman QE Bubble who helped me get on and connected me and you. He was a
Right.
mentor for me and still is a mentor for me. And I probably bothered him a thousand times over, but just finding the right people to help me learn and grow. And I basically started learning that a lot of the same skills in sports betting are very transmissible to investing and trading.
Yeah.
So I moved those skills into investing and trading. And honestly, the it ended up being a very strong decision for me, just because I right when I really like, the last year I really wasn't enjoying it. It felt like a ton of work. Like it was really like I just remember not liking it. And then transitioning into even though I wasn't making the money I was making trading and investing that I was at sports betting when I made the transition, I was enjoying it more. So that goes
Yeah.
back to the discussion of getting out of what I was trying to like what I was trying to avoid, which was working and not really enjoying my time as much. And yeah, so then I got into investing and trading, and that became kind of my go-to. And right now, I've got a couple of dividend stocks that I love, and I owe it to kind of those skills on the side. And but on this note, I do remember when I first saw, I guess, one of the first passive incomes, and I was with my friends, and they were buying movie tickets. So like Justin Bieber's concert, they were buying them the second it came out, or they were pre sale buying them, and then they were selling them the week before for like $1,000. And I just remember I was working at uh, a seafood store at the time, and I was making like $13 an hour, and just seeing these guys make like
a thousand
what I
dollars
made
in one sale. You're like,
exactly.
sign me up for this, right?
And it would take me like 2 weeks to turn 75 hours, turn $1,000, and these guys were doing it just like that, just by making the right decision, just by and I was blown away. I was like, "Holy cow, like I want this. Like I want to find some skills that allow me to do this. I need to really focus and figure out how to do this." And it's like they make it look easy because they know what they're doing. But it's the same thing. They've done it. They practiced. They probably did it for a year uh, longer before that. And for me to get into their skill, it would have taken me long to get to know which tickets to buy because you could buy and lose money. To know like you can't just jump in blindly. So they honed their skill and they were making that money on the side. And I was like, well, you know what? I got to figure out a way to do that because I'm here gutting and scaling fish, and it takes me 75 hours to make what these guys are making in a couple hours just by making the right decision. So I remember that being one of the first big like passive income like eye openers of just like holy cow, like there are ways to make money on the side.
Yeah, and I do want to obviously get into talking more about the companies that you invest in. And again, I know you're Canadian, so I'm guessing a lot of your investments are in the Canadian market, TSX, but I don't know if you have anything in the US markets as well. And I
I
agree
do.
with you too, going back to what you said earlier about the monthly dividends. That's why I'm really big on REITs. I love that monthly, they get paid their rent or their lease every month, so they pay their dividend every month. And I basically just say again, thank you for paying me to not work for you every single month, right? So yeah,
Yeah.
any favorite companies or sectors in your portfolio?
Yeah, so I think my favorite sector is the energy sector in Canada specifically. And then to hone in further, even though it might have some turbulence in the short term, but the liquefied natural gas market. which is basically just there's a very big change of Canada finally being able to ship its natural gas to Asia, and Asia is
Right.
paying roughly 5 times the price. So that's something I'm really circled in on and focused on. And it's still years away, but just like back to the earlier talk, it's kind of just preparing so that I make decisions that I thank myself 5 years from now. So that's kind of my favorite area, and kind of investing in what I think is going to pay me the best dividends from that infrastructure project 5 years from now. And like it's the largest infrastructure project in Canada, so it's got it kind of checks all the boxes I'm liking. But energy as a whole, I really like. And there's a lot of really good paying dividend players in
For sure.
the energy sector. And then the other
Enbridge,
sector,
Suncor, etc.
oh yeah, Enbridge is a rock. Suncor, in my opinion, needs to up their dividend a bit, but Enbridge is an absolute rock. They're, I think, just under 7%. Suncor like 4.5%, and
I would be
they're
okay
all
if Suncor gave me a raise without me asking for it. Like, honestly, right?
yeah. Suncor has really they have really strong assets, and they're like they make a lot of good money, but they've done a very poor job at realizing value from those assets for shareholders. And like as a public company, that's basically the entire goal of the company. So to compare them to like a company like Canadian Natural Resources, like Canadian Natural Resources has put them in the rear view mirror, and it's they're making better decisions. They've got obviously well-known name in Murray Edwards running the company, the owner of the Calgary Flames. But I think if Suncor increased their dividend as a larger percentage of the free cash flow, the market would appreciate that and actually send the stock up in price. And people don't. I find a lot of people don't like to realize that, like when you have a higher share price, your options are significantly larger. The assets, like it's an asset that the companies can use, and a lot of companies in the tech sector do that extremely well. But in the energy sector, we started to see companies do it well as well. So, for example, Tourmaline, which is Canada's largest natural gas company, an absolute dividend monster. I think they
Yeah.
paid $12 in dividends last year, and the share price started the year around in the low 40s. So like that's just it was close to like a 20% yield from January 1st to December 31st, paid in dividend, and then you also got like a 40% capital gain. Um, it's just an absolute perfectly run company. The CEO owns a ton of shares, which is something I always love to see. If the C if the management is owns a large percentage of common shares, because then you are perfectly aligned, or if they don't own a large percentage of common shares, are they buying common shares? Because it's the way I look at it is if and like I don't like when people say, "Oh, they've got enough from their stock options." This guy is putting 50 hours a week into the controlling the direction of the company. He should have he should want to wager on himself that he is going to make this company succeed above and beyond, so that his capital put in now is going to be worth that much more 5 years from now. So that's a big thing I like to look for. But back to the point, what Tourmaline did really well is they back in when energy was getting clobbered left and right in 2020, they essentially um, weren't getting recognized for their value by the market. So they spun off a new company called Topaz, which basically included all their infrastructure. And then the public markets gave Topaz, their infrastructure company, a a new free cash flow rating. So if they were getting say 3x earnings, just as a whole company, they spun off their infrastructure, which would get 6 to 8x earnings. And then what they proceeded to do is they proceeded to use those shares as currency to make acquisitions, buying companies at 3x cash flow. And it was brilliant at the time. It's brilliant in hindsight. It's just a difference maker when you can think outside of the box in that way and realize that your shares are an asset. And I think it's a perfect blend of a company that's been paying shareholders. Like every Tourmaline shareholder I know that's owned the company for more than 6 months or a year absolutely loves it. You know, they're getting paid. They have a CEO that's making decisions that benefits shareholders, and I think it just checks those boxes that I personally like to look for in a company.
Yeah. So before I ask you the next question in the energy sector, just a quick shout out to help support the Passive Income Podcast. You can buy me a coffee, link in the description, or use the QR code on the screen. Along the lines of the energy sector, I do also have to ask you about Algonquin Power and the dividend cut. I guess that's going back about 6 or 8 weeks ago now. Thoughts on Algonquin Power?
Yeah, so this is okay. Like I have areas of the energy sector I focus on more so. Anytime anyone cuts a dividend, major red flag for me.
Right.
Because if they cut it, there's more. It's more likely than not. Like I've seen this series of patterns that when someone cuts something, something is wrong with the company above and beyond the difference that they cut it in. And every company I've looked at that begins to cut, it's immediately like their next 10 years are usually very wonky. So that is immediate red flag to me. I'd rather pay a little more and get a company that is able to sustain their dividend, is able to properly manage around their dividend. Because to me, that also shows that the company didn't properly forecast and manage. And especially, like Algonquin Power, it's a utilities company. Like, I'm sorry, those cash flows are very predictable. I don't know the company extremely or fluently well, but that is a major red flag. Like a company like Enbridge would not like. There's almost a 0% chance they're cutting their dividend. So
And
I
not
compare the
not by
qual.
40%. I think AQN cut by 40%, right? Like,
No, it was disgusting, and it was the market. I believe punished them big time for it. I remember seeing it come across,
oh yeah,
and
their
rightfully.
their stock their share price plummeted. It's been recovering since, and it's gonna, I
Well, I'm
think,
looking
probably
at them now.
slowly recover, like you said, over 10 years time. But
I'm looking at them now. Like they're trading at their 2013 share price. Like what a piece of garbage. Um, like
tell us how
to
you
be
really feel.
and like to be cutting the dividend. Like I just I don't like when management plays games with shareholders' money. I don't like when they lie. Like if a company says they're going to do something, if a company says they're going to pay out X percentage of their free cash flow towards a dividend, and then the time comes and they change that, it drives me crazy because you make decisions at the time with the information you have, and when the information changes, you can't go back in time and change the decision. So it drives me bonkers. And like Algonquin Power, like I don't know the company fluently enough to comment, but there's it's like I won't even look into it because I'm not I'm not gonna get risky with stuff that I don't know, and with especially when management is making decisions like that. I stay clear, even though it might outperform a lot of things I hold. I don't want to gamble in that regard, and that goes back to my earlier point. Like I want to make safer decisions for 5, 10 years down the road. And um, there's a lot of famous investors that have rule number one: don't lose money. And you know what? Going into the weeds sometimes of that regard, and I will go into weeds, but it has to be weeds I like. It has to be weeds that I think are going in the right direction. And cutting a dividend is never a good sign.
Yeah, fair enough. Good, great points. Great points. I also kind of want to circle back to you. Earlier said that you love the monthly paying dividends, and I mentioned how my love for REITs because of monthly dividends. So, I guess kind of what monthly dividend payers do you have or do you like, and or REITs as well, like sort of anything in that monthly dividend payer section in
Yeah.
your portfolio.
So like yeah, I like monthly over quarterly, but I won't make investment decisions too much because of it. But my favorite month is probably Paydo. So they've been around for a long time. They've paid their entire share price many times over in dividends. It's a safer company. It's not flashy. They're like one of Canada's, if not Canada's, lowest natural gas producer, but they're extremely dry gas and they don't have access to the LNG ports. So pros and cons, but I think they're paying a just under 10% dividend yield right now. They dipped
Wow.
around 12, they dipped below 12%, or sorry, above 12% for 5 minutes last week. And the dividends supported all year. It's just they there's some worries that they might cut next year, but the CEO, and this is what I like to see, the CEO went on BNN, basically assured everyone the dividend's safe. They've got some future revenue generators that are above and beyond what they're generating now, so they're going to start selling into um, some co-generation, so like electricity. They're going to start selling into that, which gets a much larger price, and they also have some selling into the California market, which is significantly higher price because regulations and have basically strapped the amount of energy that can flow into the state. So it's kind of always a bidding war between users on who gets to use the energy. So that's one of my favorite dividend payers. pays every month, and um, they if ev- there's a good chance they probably increase in the next couple of years too, and um,
I'm
it's one
not
of my
over
favorite ones.
I'm not overly familiar with that company. What is the ticker symbol?
So it's PEY. It's a Canadian company. I think it's like $2.5 company, $2.5 billion company, um, and yeah, they increased their dividend in on their most recent earnings report in November, and the stock, like the market, absolutely loved it. Like it
Yeah.
immediately shot up in a big way, and it kind of sent a clear message what kind of the market likes. And they're paying down debt. They've got very modest debt levels compared to um, basically the last 20 years in the sector. But they're paying, even with this year paying that dividend, they're still paying down debt. Like I don't really like when a company is paying 100% of their earnings towards the dividend because the margin of error becomes very small.
Yes.
But my other favorite dividend companies are all the like Enbridge. I love Topaz, CGL, which is building the gas pipeline. They have predictable They have predictable revenues and predictable expenses. There's no surprises in that regard. So, for example, like a company like Enbridge, like give or take, what percentage of your monthly bills are going to get paid. You know what percentage, what profit margin you're going to get paid on the gas you charge at each home. It's very methodical and very predictable. So the risk becomes significantly lower that you're going to get any negative surprises of a dividend cut, and you can kind of rest assured that you're going to get your 6.5%, which is whatever it is now, every single year, and you're also going to get some growth. So when you're making a 10-year plan, you can kind of be like, oh shoot, like it's very easy to see where I'm going to be 5 years from now, 10 years from now, but at the same time, it's what we similar to what we discussed before. It's a slower method. It's it's not as flashy. It doesn't give that eye-popping initial decision or the initial investment decision. But at the same time, you look back 5, 10 years from now, and you're thanking yourself because now you've got all this extra income coming in, and at the same time, all this extra income is also getting you can put it towards creating more extra income. So it's a nice snowball effect.
Yeah, definitely. Whenever you can sit back and know that future yourself is thanking today or past yourself, that's a good feeling.
Exactly, and I've been on both ends where I've thanked myself for past positions, and I've basically been
I think
swearing at myself left and right
I think
the
we've
right
all been
decisions. And
there.
oh, yeah, many times over. But yeah, trying to stay on the side of thanking myself moving forward, and
Right.
obviously, even with trying as hard as I can, uh, pretty much every single week, I'm like shaking my head.
So obviously you're heavily invested in and quite knowledgeable in the oil and gas and energy and utilities sectors. Let's move on. Like other sectors, obviously, in Canada we have the big three telecoms being Bell, Telus, and Rogers. Anything interesting to you in the telecom sector, or not so much?
Not so much, but it's mostly just because I understand they're very like the telecoms, the banks. Like the banks, I like really a lot too. Like the Canadian banks are some of the most well capitalized banks on the entire planet, and for
That
like
was
a
the next
population.
sector I was going to move to was Canadian banks. I wanted to see if you had a word to get in on the telecoms first, but yeah, if you
Yes,
want to move
I'm
on to the banks, go for it.
well. I was just going to talk about them together, just because I think my thoughts are very
Sure.
similar on both. Um, they like the telecoms. They have a complete monopoly or oligopoly. It goes
Yeah.
back to the point. They know their monthly revenues like on repeat. It's very easy for them to predict their monthly revenues, and like an American company tried to come into Canada, and it was literally blocked. So like the risks are relatively extremely low from what company can come in and disrupt their steady revenue stream. Like almost every single person you run into on the street has internet and or a cell plan with them. So I think it's very similar into the Enbridge, and
Some
you know what
people
you're
even have
getting.
landlines.
Yeah, I guess so. People they're still getting some landlines from people. They like to throw them in now.
Businesses still have landlines, right?
For sure, for sure. And they have so many different revenue streams too, probably tenfold that I can't even think of. But
Yeah.
they're making very steady revenue, very predictable revenue. You know they're not going to cut their dividend. They're loved by like the pension funds, the very big money that kind of supports their like multi-billion-dollar valuations. So I think with those, it's the same thing. It's not flashy, but you're going to look back 5, 10 years from now, and you're going to, at worst, keep up with inflation. At best, because they are obviously growing still, grow faster than inflation. So it's kind of a better. I've joked around with this about some companies, but they're like better versions of cash. And while holding cash, obviously, sometimes is better because the stock price falls, it's almost never better over the course of a 10-year period when looking at companies like Enbridge, like looking at Bell, Telus, Rogers, the banks. They're just better versions of cash because you're putting your money in with them, and for the most part, you're getting back, give or take, say 10% a year. And obviously, you can't time if it's going to fall in the next 6 months or even 1 year, but just making that decision of, hey, this is a better version of cash over the course of 5, 10, 15, 20 years, it's a very big difference. And it just you just got to accept that sometimes you're going to put in and you're going to lose 10, 20% in a month or two because it's bad timing. But when you average it out over a long period of time, it's almost always a good decision. And the longer you go, the better the result's going to be. It's like the opposite of the casino. You can win, say, one blackjack hand or one spin of roulette, but if you play 10,000, you're going to lose. And owning Bell, Rogers, the banks, Enbridge, it's the opposite of that. You might lose over the course of 1 month, 2 month, 3 months, but over a long period of time, there's almost no realistic way that you lose with those companies. And now, like,
Right.
I guess segueing into the banks, I really like the banks. Obviously, they differ um, by company, but they just make money hand over fist, and
Yes.
they stay out of the news largely. But like I live in Toronto, downtown Toronto, and I can look out my window, and truly, almost every major building, like the tallest buildings in the city, are all the banks buildings. Our
Yep.
Toronto Maple Leaf Stadium is the Rogers Center, which is the telecom. Like it's basically the telecoms and the banks that like are making all the money in Canada outside of obviously like energy and all the other. But like every major city, like I can go to a random city, like you go to like Calgary, you go to Ottawa, like their stadiums are all like they're sponsored by the banks, and
Yep. Or
they're
Rogers.
yeah, banks, Rogers, Bell, and they're just making so much money. Like the Canadian banks are in the top 10 biggest banks on the planet, and like it's literally China. It's like the American banks, it's Chinese banks, and the Canadian banks. And it, if you think about it, it's just crazy considering our population is 37 million, and like our banks are literally as big as anyone's. And you can even travel to the U.S. You could travel to the Caribbean. Like the Canadian banks are like the biggest banks on a lot of the Caribbean islands. Like they're
Yep.
well outstretched past Canada, and they have that safe reputation. They have that strong capitalization. They have the government support. They kind of check all the boxes of one of those slow investments that you can look back on and be not be mad at.
Yeah, I think a great point to the stadium names. Actually, there was a uh, uh, several months ago. I had a guest on, and we were like almost jokingly talking about how you could build an entire portfolio just out of the stadium sponsor names around North America. But quite correctly, and I think before the Toronto stadium, like the where the Leafs play, before it was one of the Rogers sponsors. Was it not Scotiabank that sponsored that?
Yes, it was. Well, Scotiabank's the Leaf Stadium, and then the Rogers,
Oh,
sta- the Ro-
Rogers is the where the Jays play. Okay, yeah,
Rogers is the Jays, and then BMO is where the soccer team TFC plays. But then they've got so many buildings sponsored. Like they even
yeah.
own buildings that other companies rent out to them, like the TD. Like they're truly the largest buildings in Toronto. Like it's like TD Center, like all of them, and it just they have such a strong footing and they have such a monopoly that or oligopoly. Like it goes back to that point where their risk of being disrupted by another company or being attacked by another company is extremely low, and their revenue is relatively extremely predictable. And naturally, they've been winners for a long time.
Yeah, if I'm not mistaken, it was Scoreboard Investor and I a few months ago discussing how you could literally just build a portfolio out of stadium names around North America. And just kind of touching back to that, I believe in Montreal it's the Bell Center, and then actually in Boston it's TD Gardens. Like way back in the
Yeah,
day, it used to
yeah,
be
yeah.
Boston Gardens, and now it's TD. I think it's TD Ameritrade, but still TD, Toronto Dominion, one of the big 5 Canadian banks, is a title sponsor in the U and actually, I think RBC is the title sponsor for the arena in Carolina, if I'm not mistaken, right? So, huge presence
It's
when the Canadian banks are sponsoring the stadiums in the US.
Oh, it's everywhere. It's actually funny. You actually could do a full portfolio just on the stadiums. And I actually was talking to someone about this recently, but the exact opposite was every Super Bowl commercial last year when it was just the crazy hype and inflation, like everyone was just buying everything. Every Super Bowl commercial, the stock price, every stock public company that did a Super Bowl commercial has just gone into ruins. They were, and it's kind of funny because they were obviously trying to
When
sell
you
into
not just a month ago Super Bowl, are you talking
no,
the
I,
previous year Super Bowl?
yes, so 13 months ago, right when the
Okay.
market was very right before the market kind of rolled over, um, all these companies were selling into the hype and the next big thing. All crypto companies, all
The
every
Matt
company.
Damon crypto commercial, yeah.
Yes, yes, and there was about 10 different companies, even some tech companies, and they just since then they've 80% minus 80%, and it's just selling. It was just trying to get people just buying into that hype versus the
Right.
reality of the money they're making, the growth they're making. It's just night and day, and I think that often has to do with just the human nature of people. Like obviously, I'm very fluent on the gambling side, but it's a very very human behavioral. And
Yeah.
to see the exact same patterns across people in every
It's the
single
FOMO, right?
situation.
So, the
Yeah,
FOMO, like, you've mentioned crypto a few times. The FOMO, when Bitcoin was at 65 grand, everybody was buying it. And now Bitcoin's at what, 20, 25 grand? Nobody wants it. It's like,
yeah, it's
doesn't make
complete,
sense to
and
me.
that's
But hey,
it's crazy, and people they just make the same mistakes and this like they just continuously go through the same habit, and it's because like they want to they either are addicted to the rush of potentially making money or it's an easy decision. Oh, and they love everyone loves to have make decisions that everyone else is doing because then they don't have to feel bad about their it's almost like that sense of reassurance. But when you're kind of
yeah,
buying into
everyone
the
else is doing
fear.
it. Why shouldn't I? Well, like your mom said, if everybody jumped off the bridge, would you jump too? Well, maybe, mom. I don't know. Right.
Exactly, and it's buying into the fear of a good company. Like if whoever bought the bank, say during March 2020, it was chaos. It was scary. It was not an easy time to buy. It was much easier to sell,
Yeah.
and the emotional pain of your stock investment going down every day. And the hard decision ended up being the right decision. And over time, 5, 10 years, it's the same thing of these stocks being better than cash. Over a long period of time, making the hard decisions when times are hard are often end up being the best decisions. And then at the same time, all your friends have this are making money on XYZ stock and it's gone up 50% and you want to get in. It seems you wanna be in it because you don't want to hear them talk about it anymore. But at the same time, that easy decision is often gonna bite you in the rear end.
It it definitely goes back to the Warren Buffett saying of be fearful when others are greedy and greedy when others are fearful, right? Like that March 2020 was a prime buying opportunity for anyone that had the cash available to buy assets at the time.
Exactly, and that saying is pretty much the nail on the head. Um, as soon as yeah, it was obviously a unique situation, but the government basically stepped in and announced a massive quantitative easing program, and it was scary to buy, but the situation changed, and even if everyone always likes to think, "Are you going to buy the bottom?" Like it's basically impossible to buy the
You
bottom.
you can't
I
or sell the top. You can't time the market. And that goes back to the other
exactly.
saying is time in the market is beats timing the market or whatever the saying. It's I'm
Of
paraphrasing
course,
obviously, but
no, that's exactly it. And I have a really smart friend that um, his entire goal is basically to hit the bottom 20% and to sell the top 20%. And even then, sometimes he's fine even buying increasing that percentage if it's a more volatile asset. And it's you can never be perfect in it, but making relatively good decisions and compounding those good decisions you look back 5, 10 years, and it's interesting to see the money that's coming in from the dividends, the capital gains that have transpired, and I find dividend growing stocks often come with good capital gains too. So
Right.
it's not just a one trick pony. It's usually a dividend company that's also growing their dividend or also growing a bit on the side. So you kind of get the best of both worlds.
Yeah, I'd agree. I'd agree. I kind of want to touch on a few more sectors. I see we're already over 50 minutes, and I really feel like we could talk for hours. You've been just an amazing conversation I've had with you. But like I said, a couple more sectors I'd like to touch on. Transportation. I feel that you might have strong opinions about companies like Canadian National, Canadian Pacific, and anything else in sort of the transportation sector.
So I like, and again, I'm not as fluent in this. So I guess to touch on my opinion on sectors as a whole, I've kind of, and then I'll go on to transportation, but I've kind of focused on a couple different sectors that are very different in what's the word I'm looking for? They're not as correlated. So I kind of, depending on what is going on in the economy, I kind of can bounce around between 1 to 3 sectors that I really know well. And I think I found that to be an edge for myself. Kind of, instead of knowing 8 sectors or 10 sectors modestly, I like to know 3 sectors that are very different. So say one's like very different, but I know them fluently. Um, and that's kind of been an approach I've taken. But I spend like all day basically reading and learning about the markets and talking to people. So I do end up knowing like every sector in to some extent. And in regards to the transportation sector, the one area that I do feel relatively confident on it, like I don't like airlines. I just the amount of fees that they and Air Canada just had a positive quarter, first time I think a long time, but the amount of fees that they pay to the government, the amount of red tape that goes into getting on a plane, like I obviously asked to travel, I love traveling, and it's just it's such an uphill battle for them to make money. And there's
Right.
always the competition of someone else just undercutting because when people look for a flight, they don't really care what airline it is. So like the brand loyalty isn't that high. If someone's offering $100 cheaper flight for the exact same travel time, it's going to get taken. So I find it to be a very uphill sector. And I remember back in from my readings, I wasn't alive, but in like the 70s and 80s, whatever years it were, people like buying an airline was like the prize, lots of rich, like Kirk Kerkorian, he was a billionaire. He would love to buy the airlines, and other people would love to get. Even Warren Buffett had his rodeos with the airlines because they were the coolest thing in town. Air travel was the big thing. But at this point, I just even the cruise ships, it's such an uphill battle. And I'm not saying there's obviously very good times to buy, and they've proven to be very successful for people that have bought at the right times, but you're just dealing with so much red tape. Like a plane ticket's like 50% taxes and fees. So there's only so much the consumer can take before 50% taxes and fees is just affecting the company selling it on the other side. But at the same time, like CN Rail and all, like it's a different beast in the sense that they don't have to deal with the same stuff. They're kind of more on the Enbridge and bank side of things where they get much more predictable revenue. It's a much easier business. They're not dealing with the same taxes, fees, and same having to take put someone through this and that. And also I find the level of competition that can disrupt Canadian National Railway, like it's almost going to take a completely different form of technology because you're not just going to have a startup that's going to be able to ship that what they can ship. But with an airline, it's a much easier entrance. So I like when I'm
Yes.
looking at my companies, I kind of think I like to take a step back and think who can really ruin this industry or who can really ruin it for this company? Like who's the up and comer? And like Canadian National, the banks, the telecoms, like who's gonna like no one can really ruin it for them. So they're almost playing against themselves.
Nobody's
And
gonna
that's
go out
something I
and try
really
to build a brand new train track right beside a CN or CP rail line, right? Like,
exactly. Exactly. And and like if you zoom on a lot of the stocks, like it's very let me go see what Air Canada has been doing last 5 years. But like I saw like I looked at CN Rail not too long ago, and like they're modestly up consistently. You know, the banks modestly up consistently, the telecoms modestly up consistently. Like Air Canada, like it's below its 5-year share price, and it's basically trading at almost what it was at. Yeah, it's below its 5-year share price. It's basically been flat over the course of in almost existence. It's just it's not the same. It's not the same level of oligopoly that the others have. And I know people sometimes don't like to hear it, but if a company has an oligopoly or a monopoly, it's night and day versus fighting tooth and nail for every dollar.
Right.
But
Yeah,
yeah,
interesting
so
points on. Go ahead.
no, I was gonna say let's. I like this little sector rodeo we've got going on.
Yeah, well, so you mentioned that, you're strong in 3 sectors. We've talked quite a bit about the oil and gas and energy sectors. What are the other 2 sectors that you're big on?
So yeah, the two I've really focused on. I'm very fluent in tech and the tech sector and the crypto sector. And then so the three things I focus on is tech, crypto as one, um, energy as another, and then the third thing I focus on is just the general. It's gonna sound crazy, like the Federal Reserve and kind of what they're up to, um, and that kind of gives me my signal of whether to focus more on energy or more on crypto, because I do like to play into a lot of the. I like to sell. I like to be the one selling to people, FOMOing, and so I do that often with the crypto and the tech side, and then I obviously maintain a position in both. But and then on the energy side, when conditions aren't favorable and people are more um, running to the hills, I love to invest in dividend paying, cash flowing businesses that are growing. And then now that LNG Canada is getting closer, I love to focus more of my time and energy on that specific project. So I do own oil companies too, and uh, SAGD like I've really put a lot of time and energy. So like there's different types of oil, like there's SAGD, there's light oil, there's all the jizz and jazz of that. But those are kind of the three things I focus on. So kind of like the general market as a whole, specifically if the Federal Reserve is kind of adding money to the system and or taking it away, and what rate they're doing that. I think just between that, what I just said, and interest rates, you kind of can tell the whole story of even the real estate, even where the real estate market's going, and everything is just so correlated to that. Because if the cost of loans goes up 200% and every home purchase is an 80% loan, like it's not really like crazy to think like what's going to happen to the home prices. And I do focus extensively on the real estate market as well. I do have one property that uh, gives some monthly income. I don't really. It's kind of a bad investment if I'm going to be completely honest. Um, it's not a strong decision, and um, yeah. So I focus on, I guess, real estate, energy, and tech. Those are kind of the three things I spend all my time and energy focusing on. And then overarching is kind of just what is the general economy doing and Federal Reserve doing. And then
Right.
I try to make decisions that I thank myself with down the line. Um, and yeah, I find like this, it's like literally everything. The more time you put into it, the easier something gets. And I like even just networking, finding you and people on Twitter. There's a lot of sources now with the internet to be able to learn about things,
For sure.
and there's countless things that I still need to learn about. But I just taking those steps every single day to continue to learn and kind of grow myself, and even listening to podcasts, listening to YouTube videos. These are kind of the tools that really help learn. Like for example, on the real estate market, I came across this the other day. Like one of I think it was Brookfield. They have seven over 7 billion of paused withdrawals. So that's people trying to get money out of their real estate fund. And Brookfield literally said, we're banning you from taking money out. And the reason is because they can't sell homes fast enough to raise the capital to give these people their money. So just I just coming across that little bit of info, but just continuing to put in the time and effort, seeing all this stuff over the course of 1 month, 2 months, 3 months, it helps paint a picture of where at least I can make decisions that, again, a lot are going to be wrong. Trust me, they are wrong all the time, almost every day. But it
Oh, I've
helps
made
paint a
plenty of bad decisions and mistakes myself, and I'm sure we've all been there, right?
exactly. But I like to at least try to do as much as I can and kind of have as much information as I can to make the best decisions possible. And I think uh, not just essentially not gambling, not just throwing money around and hoping for the best, kind of putting in
Not
the time and
gambling
effort.
coming from a guy who was into sports betting as more or less a full-time job.
Exactly, but the we really tried to. It was very systematic. It wasn't. Oh, I've got a hunch. It was very systematic. It was trying to play the house against the market, and
Yeah.
that actually has taught me more than I could ever have imagined. Just because it's very system based. It's very math based. It's very human behavior based. The same way stocks and investments are. It's just you get your result one day later, and there's obviously a lot more luck in the short term, but it's the exact same discussion to earlier out. Where if you're making good decisions, you can be wrong in the short term. It's extremely hard to be wrong in the medium term, and in the long term, you're almost always going to be right. And that's why casinos still exist today, because they have people on the other end making the wrong decision all the time.
Yeah. Wow, I
So,
see we're already well over an hour. Before we wrap up, anything you'd like to say in closing?
well, I'd like to thank you, Dave. This has been a fantastic experience. I think everyone listening here and listening consistently to your shows is extremely lucky. I know myself, it helps me learn as well.
Thank you.
It helps me improve. And I think this is the right type of information that's really helping people better themselves off and really help people better not just their own lives but their family lives. And then I think the only other thing I'd like to leave off is if someone's debating kind of jumping into a passive income path, like, even though at first it might be very hit and miss, you might not be making money at first, the knowledge you'll gain early on will often help you take those next steps. And if you don't try, you'll never know. So if you just manage your risk and put in the effort, you can kind of really see where things can go, and uh, look back a year, 2 years, 3 years from now, and really be like, wow, I didn't even think it was possible kind of to develop the skills to do something on the side and get that passive income coming in. So I think those are kind of my two closing thoughts.
Yeah, exactly. And first, thank you as well for being here and spending an hour of your time with us here on the Passive Income Podcast. And yeah, very great points that you made there in closing. And with that said, like I said, we're already well over an hour, so we will end it here. If you are still watching or listening this late in the show, please just hit the subscribe button. You're still here. It's the rules. Just hit subscribe. Subscribe.